What's up, guys? It's Josh back here with a nice market update. Market's about to close here in 3 minutes. Figured I'd put out a short video running through a few technicals on the SPYs, as well as a few Forex and a couple of floaters. But let's jump right into the SPYs here. This is the actual S&P 500 index. It's just really incredible these last couple of days we've had here, what the French election has meant to the overall markets in America. I think that the reassurance that the euro is not going to be a runaway currency over the next couple of years, maybe a couple of months, is a good thing. That's what's given us the little bump in confidence here. We're basically at the highs. I mean, we're within less than a percent and a half from the highs. That's obviously going to be a psychological boundary as well. So God knows what's gonna help get the markets above that 2400 level. But something interesting that I noticed, if you were to zoom out and go to the 20-year monthly chart, and if you were to just simply run a fib extension from the low of the financial crisis all the way to the high before we ran into some issues with China, and then you pull that all the way down to the low of the issues with China, this projects it forward as to what you should expect in an upward move if you're basing that logic off of the Fibonacci ratios. So if you pull the scale back a little bit here, you can see that 2500, 2600, not off the table really. It's only a handful of percent away. It would complete the Fibonacci retracement in a statistically significant way. The 50% mark is definitely one of the more significant. Then obviously I think it'd be the 78.6 and then the 23.6 as relevance is shown. You can kind of see on the monthly chart, there's nothing really special in the technical analysis on the monthly chart. But if you were to break it back down into the daily, you can kind of see how that 2100 level played a big factor. You had a lot of chopping around this level, and you ran right back up to the next level. Then we had some chopping around at this level. But as a general rule of thumb, the Fibonacci's, it's a good way of kind of analyzing where or how to maybe phase in or scale out of a position with some sort of certainty. There's a method to the madness. There's a way, obviously, all of these professional stock traders go about doing their thing. I'm not saying they all use Fibonacci retracements, but it's definitely an industry, not necessarily standard, but something that a lot of people use on a very regular basis. So, I just think the sky's the limit at this point on the SPYs. We're so overextended. We're still kind of manipulating markets through the Fed. Donald Trump's now out saying he likes Yellen now, he hates Yellen. You never really know what the guy's going to do. So there's definitely some risk in that. Let's pull up the VIX real quick. The VIX had a nice little pop the last couple of days, but we're back to reality now. All of the retail investors bought it all here. I'm willing to bet you $1,000. Everyone's gobbling up risk contracts thinking that there's going to be a World War III. North Korea is going to drop a bomb and the markets are going to tank. That's never what happens. It's the risk sellers that usually always make the money. But real quick, let's just jump over to the euro pairing with the dollar. Excuse me. This is also another fundamentally wrong trade that I had put on. Over the weekend, I had gone short the euro, and I got stopped out for a couple pip loss. Not a big deal. But if you can see the move, you have this big gap up from coming from Sunday to Monday. And it's straight up from here. Let's jump over to the 30-minute. You can kind of see how we had the opening higher. We pulled back. We traded range bound. And then the last couple of hours, we've had some more news out of France and some other economic data out of London. And that's really helped the euro trade higher back towards the 109, even 110 range where it hasn't been in, a couple month or two, 3 months, 4 months. Last time it's traded in the 10s was, back in, November 8th of last year. So it's been a few months since we've seen the euro at this level. To be honest, long term, obviously, I still think that the euro is a great short play. I just don't personally have the 5 or 6 years to sit on a position and wait for it to kind of roll in my favor. Timing is obviously a big issue, but you're not going to have the second largest sovereign union of nations just allow their currency to roll off a hill. So expect some bullish artificial stimulus from the ECB and from other authorities that are willing and able to purchase markets or purchase securities in the secondary markets. That's something you have to be very careful for or about. Before I sign off, let's just run through CCCR. This is the floater of the day, China Commercial Credit. This fucking stock has had a long history of pops and splits and reverses and pops and splits and reverses. The most recent move higher, actually pulled back a little bit. It was almost up 50%. We had a nice move from $1.40 to above $2. So that really gets the pajama traders out of bed and going nuts with these low floaters. Don't know the story about the stock. I don't really think it matters. It has China and commercial credit in the name. So just off the top of my head, I'm going to throw out a bearish argument in that this stock is just another manipulator. There's someone who bought a shit ton of shares. Let's see if we can break it down and see where they bought them up. Yeah, it's right at the open. It wasn't even right at the open. Excuse me. This was at 10:55 this morning. So some sort of news hit, wasn't paying attention, don't really know exactly what happened. But the stock took off and kind of range bound, and now we're trading towards the low of the range here. Could be a good swing trade. Not too sure. There's a lot of follow through over the next couple of days. As you can see in the past, it's had a similar run up. This one was much more parabolic than this previous one. So I guess we've been trading, let's see, from the 50%. We've been trading at a reasonable level. Let's just ignore the Fibonacci's on these. This is all just bullshit, large orders, smacking level 2s around and kind of changing the actual market price of the stock. But thanks for watching. If you like what you see, subscribe, like, comment, do all that stuff. More videos coming your way, AM, PM. Let's get it done.